Jason Trennert, Chairman and CEO of Stratega Securities. E.J. Antoni, Heritage Foundation economist. Jason, headline, Friday night. I saw it with my own eyes. We talked about it on the radio Saturday. Ford Motor Company, bless his little heart, losing $100,000 per EV vehicle. Do you have a comment on that, please?
Yeah, the comment is that...
You own Ford stock?
Yeah, no, I don't own Ford stock. We do own Toyota, but that's because they've had a much better approach to this. So they haven't forced it. They focused much more on hybrids than electric vehicle, going crazy on electric vehicles. But the thing is, prices set what supply and demand are. The government should not be in the business of telling people what they should own and why. And certainly with some sort of completely artificial time frame on electric vehicles, which happen to be perhaps the least green product you can possibly come up with. They're developed with extractive materials. So the whole thing is crazy.
It's wonderful that they're putting tariffs on China batteries and so forth, because nobody wants stuff anyway. They can put something on China for buying the oil of Iran and Russia and financing 2 wars against the United States. That the Bidens will never do. E.J. Antoni, though, moving right along, a very poor Michigan Consumer Confidence Sentiment Survey really plunged from 79.5 to 67.5. Inflation expectations have gone up. We have a chart. You can see, by the way, at roughly 67-ish, where it is today. Look at where it was under the Trump years. It was about 100. Now, EJ, let me ask you, does this bode a downturn in consumer spending and retail sales? And does this bode another upturn of inflation? What's your take?
Well, I think in real terms, you're absolutely right. This does signal a downtrend, but probably not in nominal terms, because consumers are still flush with a lot of cash. The problem is that cash isn't worth as much anymore. We still see we still see nominal wages rising, for example, but we're also seeing inflation expectations really take off, not just in the consumer sentiment report from University of Michigan, but today we got a report from the Cleveland Fed and another one from the New York Fed, and both of those showed that inflation expectations are back on the rise.
Cleveland Fed's expecting about a 5% annualized rise in the CPI on Wednesday. That doesn't mean they're right, but that's what the inflation nowcast, or whatever it's called, is suggesting. Is that your bet? Do you think you're going to get bad inflation numbers?
I do. I think we're going to get another hot report, and it all goes back to the cause of inflation. The government is still spending, borrowing, and creating way too much money, and that's what's driving this devaluation of the dollar.
Devaluation of the dollar, not against other currencies. Jason, what's the stock market outlook? Good correction, came right back as of the close of last week, almost back to the all-time highs, if I'm not mistaken.
Yeah.
I think
we're within 1% of the all-time highs.
It was off a smidge today, but I want to get your outlook. I mean, I think you've got a lot of risks. You know, things look great until they don't. I mean, that's an issue in our markets.
Listen, EJ and I were actually talking before we came out here. There is so much manipulation of what I think is the most important price in the world, which is the 10-year Treasury yield, by both the Treasury Department and the Fed, that it's levitating stocks. And what we found is that if 10-year Treasury yields can stay below 5, it's probably still risk on for the stock market. Having said that, just supply alone, just based on interest expense, is going to overwhelm the system. You're increasing the debt, as you know, by about $1 trillion every 100 days, just based on interest expense.
We're going to run $2 trillion deficit this year. Easy.
And so,
maybe more.
So it's 7% of
with a less than 4% inflation rate, and an inflation number. Not only is it up 20%, right? But the inflation number near term, 3-month change, is accelerating.
And this is why I think, for all the talk about inflation as an election issue, my own opinion is it's already settled, and President Biden has lost on this issue. Things will not change enough between now and Election Day that people don't feel what they see with their own eyes, which is the fact that their standard of living has declined. The dollar has hung in there versus other fiat currencies, but it's gone down meaningfully versus things that people have to buy.
That was a May consumer confidence number too. E.J. Antoni, why doesn't the Treasury sell 100-year bonds? Why don't they've got a huge amount of debt. They don't know what to do with the debt. Interest expenses blowing through the whole budget. I mean, that's a big factor now. We're going to be spending more on net interest costs than we are in Social Security, Medicare, defense, and all the rest of it. Why don't we sell 100-year bonds? Instead of selling 91-day Treasury bills, which is what the Treasury is doing, and then pumping in liquidity for people to buy it, why don't we just send it? You know, Gen Zers are going to pay down this debt for the next 100 years. So why don't we issue a long bond so they don't have to pay down every 91 days? Why not? What's wrong with that?
Because to Jason's point, you can't underestimate, I think, how much manipulation is going on in Treasury markets right now. Both at this point, both the Fed and the Treasury are essentially conspiring to bend the yield curve. They're doing everything they possibly can.
The yield curve is incredibly
down long-term yields.
It's inverted.
And I think
sold 100-year bonds.
It makes even less sense, right?
It makes even dumber. They're selling into the most expensive, costliest part of the yield curve, point number one. The curve is inverted. By the way, Japan didn't they sell 100 years?
Well,
50 years.
Mexico issued 100-year paper. Mexico issued 100-year paper in euro. China is talking about issuing 50-year paper. China.
Why are they all smarter than we are?
Well, we have the exorbitant privilege.
You're a bond investor. You should remain in Mexico.
That
was a joke.
It's pretty good.
I'm sorry.
But you should be sure.
100 years, EJ. I want you to look at it and do your homework very carefully. Jason, Trennert, EJ, Antoni, thanks very much.